Okay. All right. Oh, you keep dropping out. Okay, let's get started here. Welcome everybody to session number 6 of the non-resident tax training. So we're 75% of the way done. So it's been a long slog, but we are getting there. We're closing in rapidly on being done. Tonight is one of my favorite nights. Tonight is state night. And then we will do special circumstances and then final tax clinic prep and the volunteer readiness check. Our clinics start on February 18th. So that is basically just 3 weeks away. More details. So we're going to do some general updates on volunteers and client and homework. Then we're going to do state tax training. It's mostly going to be NR, but we're going to sprinkle a little bit of resident training in there as well. And then we're going to wrap it up with some more practice. You'll notice that all of our sessions here in the spring, we do training, but then we also have time to practice because really you are now developing the skills, the muscles, the kind of chef tasting capabilities to be able to do non-resident returns quickly and accurately in TaxSlayer software. So you need to spend a lot of time doing that. And this way, hopefully everybody can stay a little bit closer to current with getting through all of the Moodle work. We will take a break again sometime around 6:30, whenever works out conveniently for the timing. So update on volunteer. Thank you to everybody that has signed up for tax clinics. I really appreciate that. There was a big shift from a huge pile of zeros over to the right, which is really awesome. We still have some folks that are down in that 0, 1, 2, 3. So if you have not signed up yet, please go in and sign up. We have opened up the tax clinics, but we can adjust them now to add additional volunteers. So please do that. It's a very busy slide, but this is what the volunteer capacity looks like, basically. What I would say is that if you're looking for a remote event, you're going to be looking in April because those are all pretty much full at this point. It's definitely a lot easier to find a spot for in-person events. They do have more room available and have room available back into March instead of only out into April. It's a little bit unfortunate because we really do need folks at the end of the tax season. There's a lot of students that procrastinate. So there's a kind of a rush at the very end. So if you are looking to add another clinic or two and you want to put it into April, I think that would be most appreciated if you can make that work. All right. Our tax clinics are open for this season. So if you would like, all volunteers are welcome. They can and should get a free membership. You can do your own taxes for free if you want to. You can also see what the clients see. See the software, see the tools and the guides. The PG training one is good as well, but this gives you the real deal. Go to the main website, that little blue button, request your free membership. You can do that and then choose your school or choose North for the general membership. Really the main difference between them is the in-person tax clinics, right? If it's for a partner where we don't have any in-person tax clinics, they will not have a calendar that shows in-person tax clinic options. All right. Theoretically, TaxSlayer released a fix to the software that resolved the date departed entry thing. I was doing a lot of work in TaxSlayer FSA and it still seemed to require it. I don't know if anybody else has seen that it's fixed or not. We'll mess around with it today to try to check, but hypothetically that should be fixed now. You don't have to enter that exit date, and please don't. If they don't leave, then don't enter a date. All right, member update is very modest because we've been open for about 24 hours. A couple hundred people, I think something like that, have signed up. All of the 2023 memberships were all canceled on Monday. Everybody got an email saying, your 2023 membership is over. Please sign up for a new membership. So some people did, more people will sign up over time. And we'll see how it goes. So it's a very sort of hockey stick pattern, right? Very slow increase in the beginning. And then at the end, it ramps up because everybody's like, taxes, so I have to do them. All right. Tax clinic appointment sign up. So people are already signing up for appointments. That's the way it goes. So there's just a few of them. That's okay. We'll see what more there is. And our current appointment capacity is about 1,800. So if we get those last few people to sign up for a few more, I think we could definitely hit the 2,000 mark, which would be a first for the program. It would be awesome. All right. Wanted to talk about some tool improvements coming soon. So we are making an improvement to the guides, which is basically to take the information that people enter for your guide, your information, and put it on the form on the screen in exactly the spot that it goes. So when they enter their visa, they enter their income documents, we can know things like you need to make a subtraction of $5,000 of wages because you have a treaty benefit of 5,000, but you only got a W-2. Now we're going to be able to put that number exactly where it goes. Sometimes a lot of the time we'll still leave it with the blue arrow because if we asked every question, that would be a very, very long interview. But for example, this is what the old personalized guide page looks like. So it's fine, it's got the stuff there, but it does get a little busy. And then this is what the new one would look like. So it would say their exact country, their exact treaty article, their exact amount as an example of it. So we should be rolling that out this weekend, pending any craziness that goes on. So that is coming very soon, and we'll confirm it with all the volunteers when that's out. All right, homework feedback. Harold. All right, so I was kind of mean to everybody about Harold because everybody has Harold's tax return. So if you look at it, you know exactly what the one that you send me should look like. So when I see something that is not like that, I'm a little bit mean about it. There is definitely a bug in TaxSlayer that doesn't always transfer the schedule OI days. I have to admit, I have a really hard time replicating this, but from what we can tell, it seems like when you don't click continue or don't click continue save every time getting out of that menu, that's perhaps where that is. So do your best to get it. And then when you're done, all right, whoever's you, all right. When you're done, you get the PDF, just take a look at it, right? You do the quick quality review before you send it to me. That way I don't write things in red all over your returns. The 8843 in the schedule OI, right? I think everybody's seeing how easy it is to miss data, right? And it's very easy for all of our customers to miss data too. That's part of why we're doing those big blue boxes, is trying to make it really obvious. Put a number here, put something there. It's not easy to catch, and the software got cut off there. Software is not smart enough to catch it for you, right? So that's where we as quality reviewers come in to make sure everything is good. So do your own quality review before you send things in. I will say most volunteers were good with like the main forms, like the 1040 NR, right? But that's kind of what we would expect, because if you get things right on entering the income documents, it's going to do that math for you correctly. All right, moving forward. All right, for Kim feedback, right? The state tax refund is taxable income. So please make sure you enter that in there. All right, yes, they do change the social security number. So I think you have to have a 000 in the middle or something like that for TaxSlayer. That's totally fine, right? I'm not going to be able to match exactly what those numbers are, and that's okay. I will kind of question it if there are no social security numbers in there, but as long as it's something in there that's close to what I gave you, you're going to be fine. All right, so coming back, so state tax refund, right? A lot of people miss this one. Remember, if you get a federal refund, that doesn't go anywhere. We don't really care about it. I mean, we say, hooray, that's great. We love that you got money back, but we don't care about it for next year's tax return. However, a state tax refund, we need to determine if that refund is going to be taxable for the return. And if they are, it's going to end up on the Schedule 1 and the 1040 NR line number 8 is where it goes. All right. Okay. That was a relatively quick run through that. Are there any questions anybody has on those? Volunteer, membership, homework. All right, so just as a reminder, so you have doing Harold's return, then you have doing Kim's return, and then you have 2 quizzes, an entering data in TaxSlayer, and then a quality review quiz. where you get to be the quality reviewer, find how many mistakes there are, tell me what mistakes are made on that return. I can tell you that there are at least 1 or 2 mistakes made on the entire return. That should be no surprise. Okay, let's talk about state nights. Let's talk about where our clients come from. All right, so we are a coalition, right? We support people from all across the United States. We train volunteers at schools across the United States, and we see lots of people come to us. So as I look at the numbers for who are all of our partners, how many returns do we think we're going to do? This is kind of what I see. So we will probably do something around 6,000-ish returns is my best estimate of that. And of those, just under half, or about 2,700, are probably going to be Minnesota returns. Maryland is probably our next highest number with 50 or 550, then Pennsylvania, then Ohio. We have a bunch of partners in other states that are smaller. That includes North Carolina, Alabama, California. We get a lot just because of people doing internships there, but then Kansas and New York. And then there's 600 that are going to be thrown around like whatever number of states. I have no idea where they're coming from. It's going to be a random smorgasbord. We do also have several partners that are in states that don't have a state tax return. That includes our partners out at Washington State University and down in Tennessee and in Texas. So those lucky guys don't have to do a state tax return. And of the returns we do, some percentage of them are also going to be multiple state returns. Somebody was here in Minnesota. They decided that it was way too cold. They moved down to Georgia and said, heck with this, we're going to go live where they grow peaches. So we'll see a decent number of those multiple state returns as well. All right, so let's talk about expectations for volunteers with regards to states. All right, so we do not expect that all volunteers are going to be an expert in all states. That's actually kind of what we used to do when we were smaller. We only had 4 or 5 states, and we said everybody has to learn all of these states. But we've got too many states now. I don't think it's fair to expect everybody to know everything about 10 states or something like that. But we do expect all of our volunteers to have some level of expertise on some number of states. So as we look at that profile for the states that we're supporting, I would say that all of our volunteers need to know how to do a Minnesota return. All of our volunteers need to pick a couple of our big states, 2 out of that 3, and say, I want to do the East Coast. Give me Maryland and Pennsylvania, or let's stick Midwest. Whatever you want, 2 of the 3, and then pick one of that smaller subset of states to say, okay, I really want to go live in New York. So I'm going to learn about New York taxes so that when I go live there, I know how much I'm going to pay or not pay, as the case may be. So we expect our volunteers to use the resources available to them. All right, so we're going to go through some like shortcut guides for the states tonight as we train you. We're going to publish those as like a state supplement for the 4011 so that everybody's going to have those available to them when they're at the tax clinics, right? Never in our program do we expect you to remember everything off the top of your head. You always have resources available to help you. We want you to use those. We want you to remember to use those, and they're going to make life a lot easier. Our personalized guide tool also does a lot of that heavy lifting for you because we've built in a lot of the stuff that you're going to need to know about. We'll talk about it a little bit here later. Now, I know that not all volunteers are from a location with state income taxes. All right, so I understand if you are seeing this slide and you're like, why do I have to do that? We don't have any state income taxes. So I'm going to remind you, right? So we are a coalition. We help students from across the United States. We have volunteers from across the United States helping students. So just like volunteers from other states are going to help your students, you are going to help students in other states as well. All right, so there is it's not a quiz, Mari, it's a questionnaire. There's a questionnaire in Moodle that should now be live. So everybody gets Minnesota. Pick the two that you want for the big ones. Pick one of the small ones. If there's some state that you really, really, really want, you say, I'm going to go live where the mountains are. I want Colorado. Tell me that. I can't promise I'll have Colorado for you next week, but we'll work on giving Colorado a go so that you can do that return and know how to do that. All right. That questionnaire is due on Friday by 5 p.m. I would encourage you, if you have any preferences, to submit it by then. Because if you don't, I will choose your states for you. And I will pick based on like everybody else chose these. So to get a good distribution, I'm going to choose these ones here. I don't think that there's like any huge difference in like this one is really hard versus this one is not so hard in terms of the different states. So you're not going to make it a lot harder for yourself or easier for yourself based on whichever state you choose. All right, so let's talk about what learning a state looks like. So because we're kind of modifying things, I'm kind of still building this out for you. So Moodle is not completely ready yet. I will be completely honest about that. But as you look at a state, what are we going to do? You're going to do a quiz, right? Just some basic information about how non-resident aliens are taxed on that state. You're going to prepare a scenario for that state. You're going to do a quality review for that state. And then you're going to do a multi-scenario state that includes that state. So, for example, if you choose say you choose Pennsylvania and Maryland. So I might give you a scenario where there's somebody that's going to school in Maryland, but they go work in Pennsylvania for the summer. They have an internship there, or they go out to California or whatever state it is that you choose for them to do. So that's how you'll get experience doing all of the states and then doing multi-state ones as well. Okay, so as we look at this, how are we going to approach these states? So it used to be that I would start by volume. We do Minnesota first, and then we do everybody else. Turns out on like the easy to hard scale, Minnesota is like on the hard side. So we're going to start with the easy stuff and build up to the harder ones because there's a progression, I think, that'll make it more logical for you to understand how states approach tax. So the easiest ones of all are the ones that don't have any taxes on their wages, right? Which is Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. We've got partners, like I said, Tennessee, Texas, and Washington. Tennessee does have a tax on interest and dividends, but it's not in TaxSlayer. We're not going to worry about it. Anybody that files a return from one of these states is very likely to have nothing in their state section on their W-2, right? No tax paid, nothing like that. That is great because they don't have to file a return. That is also really bad for our clients because one of the few deductions that we have is state income tax paid. So if they don't have any state income tax paid, they don't have any deductions. I suppose they're probably better off not paying tax in the first place, but even so. All right. The next easiest ones are going to be all of the ones that we don't train you on. So we will have a guide, we'll have a list, we'll say, these are the ones that we train our volunteers on. This is what you should say if somebody comes from Maine, and they say, can you please help me with my tax return from Maine? We're sorry, we're not trained on how to prepare state tax returns for Maine. So we can't help you with those forms or review them for you. TaxSlayer does prepare those returns. You should be aware of a couple of concerns. And this is a problem with all of our states, not just like the new states. The guidance in TaxSlayer for choosing your state residency is not always the right guidance for non-resident aliens. They give guidance that's based on somebody that's a US tax resident and that can be domiciled, and that's not something that we necessarily see. So we'll say that they might need to use different rules, but the truth is like 99% of the time they need to use different rules. And then sometimes there are special adjustments that have to be made on the state income tax return for a non-resident alien. Sometimes federal states don't honor federal treaties. Other times there's special treatment for scholarship grants. So those are the things that we'll talk about when we do our training. Those are the things that we won't know for the states that we aren't trained on. So we would at that point say, please go to the State Department of Revenue, find their website, look for information and guidance about it. Usually they will have something out there on the website about what to do. All right, here's a map of the very light blue states. They're the ones that we don't help, at least not right yet. So the darker ones are the ones that we do, and the darker it is, the more we'll do. Okay, so as we talk about the states, the first thing that we're going to talk about for state taxes is residency, right? That's also how we started for the federal tax return. We said, are you a resident alien or a non-resident alien or a US citizen or national, which makes you automatically a resident? Just because we have one set of rules for federal residency, we do not necessarily have the same set of rules for state residency. Sometimes it's easier, sometimes it's more complicated. So as we start, this is the first place that we're going to start is that person a resident of the state? You can definitely be a resident of multiple states. That means you're paying taxes everywhere. Definitely happens. And then we want to know from there, how does the state tax the income based on their residency? And then what little special things the states have about the treatment of their taxation. Again, tax treaties are a big one. We have a few states that do local returns. And then we'll go through from there to preparing the return, finishing up and filing, because there's some filing fun as well. Okay, so on the scale of easy to hard, we're going to start. We used to do Wisconsin, but we don't have any active partners there, so we get to skip Wisconsin this year. If you really love Wisconsin, we can pull that one out for you. But we're going to go through California, North Carolina, Pennsylvania, then we're going to skip over to Minnesota, and then next week we'll hit Maryland and Ohio. And then I'm still working through Kansas, Alabama, and New York. That's approximately where I think they are, but we'll slot them into the right spot as we go. Okay, so talking about residency, right? Immigration definition is not the same as IRS definition, is not the same thing as a state definition. Most states base their residency on the concept of domicile. So domicile is the place that you intend to make your home permanently or for an indefinite period. You only can have one domicile. And once you establish it, it continues until you take some sort of positive action to change it. If you leave temporarily, but you expect to come back, you have not changed your domicile. The challenge is that our non-resident alien students, scholars, teachers, researchers, and their families that are here on the F&J visas are not here permanently or indefinitely. Their visa terms require that they leave at the end of it, either when they graduate or at the end of their OPT, or they can change their visa and change their date. But while they're here on an F or a J, they are not here permanently or indefinitely. That means that they cannot be domiciled here in the United States while they're on the F and J. So that makes some things a lot easier for us because we start off with a state tax residency is based on domicile only. We know automatically, not domiciled, not going to be a resident. So California has its own special definition of domicile. California's got its own special things for a lot of stuff. California makes many states consider domicile and residence the same. California doesn't necessarily do that, but they do go along with the idea is where you voluntarily establish yourself permanently or indefinitely, making it your true fixed home. They still go along with the idea that there's only one domicile. Once you have it, it stays the same until you change it. But you have to actually do something to lose your domicile, right? You have to abandon it, physically move to and residing. You have to demonstrate intent. So moving to another state is possibly good enough, but do you register to vote in that new state? Do you change your driver's license? Do you change your car tabs, right? All of those demonstrate that you are gone and you're not coming back. Excuse me. All right. So residency for California. So you are considered a resident for California if you are present for any purpose other than a temporary or transitory purpose. And you are also a resident if you are domiciled in California, but you're outside of California for, again, a temporary or transitory purpose. All right, so the definition is very vague. I think they kind of do that on purpose, right? So generally, you are not going to be a resident of California if you are simply passing through California. Here for a brief rest, like this is what they say on their website. It's crazy. Here for a brief rest or vacation. Here for a short time to complete a job, a transaction, or contract work. All right. So because all of our individuals that we support are F and J visa holders, right? They are here for a specific short period of time. I know it's a couple of years, but it's still a short period of time. It's a defined beginning and a defined end. So for our purposes, if you are an F or a J, resident alien or non-resident alien, you are a California non-resident. All right, so it's very simple and straightforward. All right. Other general California rules. You're going to use the same filing status that you do on your federal tax return. So single or married filing separately. There's not going to be any joint returns. You're going to pay California tax on California income. As a non-resident, you only have to pay it on money that you earn in California. That would be wages while working at a job there. Or if you have a school in California that's giving you money to go there or to work on a project, then that would be a scholarship that's California sourced, and that would be California income. California does not honor tax treaties. All right, so all of those super good deals that some people have, California does not go along with that. California also has a health insurance requirement and a shared responsibility payment. So the idea is if you don't have health insurance in California and you don't meet some exceptions, then you have to pay like $400 or $800. The good news is that this does not apply for California non-residents. So that is one of the exceptions. But we do have to do adjusting to make sure that the California tax return does not show that additional payment. So if you choose California and you do any of those returns, make sure you're looking and following the instructions to get rid of that California shared payment. The requirements to file a California return are not the same as federal. It's a much higher number. However, what we're going to generally say is if you had to file a federal return, go ahead and file that California return as well. Usually you're going to have income tax withheld. You may get a tax refund back. So if you're filing a federal, go ahead and file that same California tax return as well. California, just to make it even more fun, it's a community property state. So like what one spouse earns, the other half owns half of. It's based on where you're domiciled though. So if anybody was domiciled that we were dealing with, so this would be for residents, right? That would affect their return if they were filing separate returns. I do not expect that we're going to see any of these, right? We would be talking about somebody that is a US citizen or permanent resident that was domiciled in California and has a spouse that is maybe in another state earning income, and they need to allocate their income between the states and the spouses. So it does get very complicated. If you see somebody like that, this would be a fantastic time to reach out to a site coordinator. And I will probably reach out to either our partner schools out in California or the California Franchise Tax Board, because that is not something that we see very much. All right, so let's talk about doing an example for Olivia. All right, so Olivia is a senior at the University of Minnesota. She's studying material science. She was single. She was born in 2003. She has provided over half of her own support. Her parents live in Wisconsin. She's a US citizen. Her parents are not able to claim her as a dependent because she's providing over half of her own support. She worked at a U of M professor's lab during the school year, and then she had an internship over the summer at a 3M manufacturing plant in California. So what do people think her residency is going to be? If you think that she's going to be, we're going to go way up high for California non-resident, California part-year resident. you think she's a full year resident? And if you're, I'm gonna do the Zoom things here. So if you're on Zoom world, if you wanna give me like a thumbs up because you think she's a non-resident, or like applause if she thinks she's a full year resident. What do you think? So if you remember, we said California residency, right? You have to be domiciled there, permanent and indefinite home, or you have to be there for something more than a short-term transitory visit, vacation job. So do we think she's a non-resident? Do we think she's like part-year resident? Full year resident? All right. I see lots of good hands here in the real world. Yes, and I see some good thumbs up. Very nice. That's right. She is going to be she's going to be a California non-resident, right? Because she's only there for a short period of time. See if I can make this do that. Right? She is going to be a definite non-resident. She's only there for 3 months, right? She's definitely not established domicile. She's not staying there. All right. So when we get into preparing a California return, right? The good news is California returns are part of tax layer. This is like, I'm going to say this for everything, right? Most of the federal information automatically flows. All right. So what you're really needing to do is make sure that that return is correct. Usually the most important part is the question that we just answered. Are you a resident of California or a non-resident of California or a part-year resident? And then the other one is the health insurance payment is the big one for California returns as well. Again, those state residency statements are not necessarily right. All right, so let's go see if we can demo doing a return. And practice lab for California. I don't know if that worked. It did. Yes. There we go. All right. All right, let's go find Lisa. 95070. All right, through the magic of TaxSlayer, we will go here. We're going to go to her basic information. And we're going to do personal information. We're going to change her zip code. 95070. She now lives in California. Hooray! Good job, Lisa. You moved. Okay. We're going to jump to the state section. We're going to add a state return. We're going to say California and continue. Right? Here's where they have their definitions, right? Mostly the right, maybe not completely right, but we're going to say non-resident. All right. And then we're going to say this, we're going to say no. And then we're going to go to coverage exemptions. And we're going to select the individual as Lisa, and we're going to say that she is a non-resident. All right, there we go. We have now prepared Lisa's California return. So it is truly just that simple. If you know the little pieces of information that we need to do. She's a non-resident. There's this healthcare payment that she doesn't have to pay. We need to adjust her return to get it out. Potentially, if there was other stuff going on, we might need to know about it. But for this one, it's just that simple. All right. Let's go on. So, any questions on California, I guess, before we move on to anybody else? Right. California's the...
I'm sorry, I had a question. It's Kathy.
Hi,
If you have a non-resident and they have a treaty for wages, it's not honored in California, where do you adjust?
So in an ideal world, the organization that provided the W-2 for them is going to report the full amount as taxable wages for the state on lines like 15, 16, 17.
Okay.
So just like they do for Pennsylvania when we get to that in Herald.
Okay, thank you.
Yep. I would also say that generally like a company that you go work for at an internship, they are usually not good at doing treaty exempt wages. They're going to just give you a W-2 no matter what your situation is and say, you figure it out on your tax return. You know, universities will do that, but they do have a lot of experience dealing with international students and treaty benefits. So,
Thank you.
of course. All right, let's talk about residency based on days in the state, right? So some people, by virtue of their visa and their federal residency, they're automatically going to be a non-resident. Others, we have to go like a layer deeper to say, let's look at how many days you're physically present. And this is where we get our friends in North Carolina come in. All right. And this is where it's fun because they have a residency that's based on number of days. And for this year, because it's, or 2024, because it was a leap year, the number of days or the date that the number of days is changed. So for North Carolina, you will be a resident of North Carolina if you were domiciled in this state at any time during the year, or if you resided in the state during 2024 for other than a temporary or transitory purpose. In the absence of convincing proof to the contrary, an individual who is present within North Carolina for more than 183 days during the taxable year is presumed to be a resident. But the absence of an individual for the state for more than 183 days raises no presumption that they are not a resident. All right. So in English, if you are in North Carolina for more than 183 days, you will be a North Carolina resident. Less than 183 days, non-resident. So kind of a straight, easy, bright line on those. And then for 2024, that non-resident day is July 1st. So if you came at the beginning, you're here past July 1st, you're going to be a resident. All right. Considered a non-resident, less than 183 days. So there is such a thing as a part-year North Carolina resident, but we are not going to see them, most likely, because to be a part-year resident, you have to have moved your domicile into North Carolina or moved your domicile out of North Carolina. Remember, our F&J visa holders are not domiciled here in the US. They're domiciled in their home countries. So they can't move it into North Carolina or move it out while they're on that FJ visa. So they are not going to be part-year residents. They're either going to be non-residents or full-year residents if it's more than 183 days. What effect does this have? All right, if you are a non-resident or a part-year resident, you will pay North Carolina tax on North Carolina income. If you are a full-year resident, you will pay North Carolina tax on all of your US income. So if we imagine somebody that is going to school at Appalachian State University, they were there in the spring semester, they went to Texas for the summer to do an internship. They were gone for 3 months, they came back. They are doing the back at school for the fall semester. That means that they're roughly there in North Carolina, something like 280 days, something like that, right? They really passed that 183-day limit. That means that they're going to be a full-year resident of North Carolina. That means that they are going to pay tax in North Carolina on the money that they earned while they were working down in Texas. So this is a common theme that we will see among several states. It is also, unfortunately, a theme that never makes any of our clients happy to hear that they may have to pay tax in one state on money that they earn somewhere else, or have to pay tax in both. All right. Go the right way. All right, there is a separate form that is used on a North Carolina return to show what portion of your income that you have to pay the tax on. So there usually are a form that says, okay, here's your total income, here's the North Carolina amounts. That's what you use to calculate the actual tax you owe. Note that this only affects your North Carolina return if you had income in another state. So let's say that you had this fabulous internship, but it was in New York and it was for some like fashion magazine and they did not pay you. Like, right, you were lucky to be working there for them and getting the coffee and they would not give you any money for it. You didn't earn any income there, so it doesn't affect your North Carolina return, even though you were gone for all of those days. You're still going to just pay tax on only your North Carolina income because there's nothing else. All right, here are the filing requirements for North Carolina returns. You will see that non-resident aliens are down at the very bottom with a $0. It is worth noting that this is for North Carolina income only, so it's not like every possible non-resident in the United States has to file a North Carolina return. It's only if you had some North Carolina income. So, but any income at all, and you got to file that North Carolina return. All right. General rules. If you file a joint return on your federal, you're also going to file a joint return in North Carolina. If both individuals were residents of North Carolina and had North Carolina taxable income. So usually that's going to mean the same filing status, which is going to mean the same single or married filing separately. North Carolina does honor tax treaties. They have a standard deduction, so students from India can get that. It is a different number than the federal number. Fortunately, TaxSlayer has those numbers. We don't have to worry about those. And they are allowed a deduction for qualifying children if they are allowed to take the federal child tax credit. The amount varies based on filing status and income. So there are some very, very limited circumstances where our clients can take a deduction and get a child tax credit, right? That's going to generally be individuals from Canada, Mexico, India, students from India and South Korea. They have a child, that child is a US citizen, they're a resident, they're born here in the United States, then they can be claimed on a tax return and they can get that deduction and credit. All right. North Carolina returns are due the same day that the federal returns are. You also need to enter your the county that you live in your North Carolina return. There is a map on this link here to find the boundaries for where you are based on your address in North Carolina, if you need to do that. All right, so let's bring our friend Nick in and we'll change a few days here, right? So Nick is a student. We've already talked about him before, right? He came in August of 2022. He went home over the summer in 2023, and then he's been here in North Carolina all year during 2024. So let's do that and hide everything, show everybody again. All right, so raising hand high and thumbs up if you think he's a non-resident of North Carolina, kind of in the middle if you think he's a part year, hands all the way down, and like the applause or the fireworks if you think he is a full year resident for 2024. What do you guys think? Yes. Yep, I know it's kind of hard to do. How do you do it down when somebody's down or not? Down. Yes. Yeah. Thank you, Kathy, for that clarification. Yes. Yes, that is right. Nick is going to be a full year resident of North Carolina, right? Because he was here the entire year. It's based on the number of days that he's present. He was present in all 366 of them. So he is going to be a full year resident for North Carolina. All right, let's talk about Jacob. Jacob is a resident. He is a sophomore at App State. His parents live in Charlotte, North Carolina. His parents claim him on their return. They're paying for school, tuition, room and board, all that stuff. He did work on campus to get some spending money. What do we think about Jacob? Do we think he is also going to be a resident or a non-resident or part year resident? Where do we think Jacob's home is? Yep. Where is Jacob's permanent home? Is that in North Carolina? I'm going to say yes, right? Because his parents live in North Carolina, right? That's probably where his permanent home is. So he is also going to be a resident, a full year resident of North Carolina. when he filed his tax return. All right, let's demo. Okay, so we're gonna demo the state residency tool now. So if we go back to here, we go to here, we go to here. Okay. All right, I am going to, where was Nick from? South Korea. All right. And I am going to just be a little bit lazy. I'm not going to be that. I'm going to do this. I'm going to modify the dates just a little to show functionality. Wait. Oh, okay. All right. We're a non-resident. Off we go. Nick is single guy. He does not have any children. He has a social security number. He has a W-2. We'll just say a wages for 9,000, make life easy. No charitable, no student loans, no filing returns last year. All right, so he lived in North Carolina all year. All right. So when we get into the state tax portion of the personalized guide, we have the logic built in to say, oh, I know that for North Carolina, it matters how many days you were there. I'm going to take your information that you originally entered about how many days you were in the US and how many days you were out of it, and translate that over and say, okay, those days we know you're outside of the US. You can't be in any state. For everything else, you have to tell me where you are. Now, when I was on the previous page, I said that he was only in North Carolina, and that's where he earned his income. I could also add, let's add Alabama. And so now I would say, okay, I have to like tell you where I was 5/13/2024. So let's say at the beginning of the year, I was in say, California. I've entered overlapping. That's right, I have. You're not going to like that, are you? There we are. Alabama. And then 08/12/2024 through 12/31, or let's just say California. All right, and it's smart enough to say, hey, wait a minute, you told me Alabama and North Carolina. You didn't enter any Alabama or North Carolina. You need to go back and fix your data entry. We say that, and that will create the guide. And so when we get to this, because of the numbers that I entered, right, for that situation, I only entered enough to say that Nick is going to be a non-resident of North Carolina. So if we jump down right here, we say, here's your residency analysis for the state. You're a North Carolina non-resident. Start your return, choose non-resident there. All right. So for the states where we know, the states that we have the training, the states that we've built that into our tool, right? We will ask the questions for this clients to answer so that they can figure this out themselves. This is a tool that you guys should also use when you are working on all of your practice returns, and that you should be familiar with, so that when a client comes to you, you can say, oh, well, what did your personalized guide say? Let's go look at your residency summary in that to say what your state residency is. Make sure all of the information that you entered there is correct. All right. Okay. Any questions about that before we get going again here? All right. All right, I'm gonna jump through the forms really quick, and then I think we'll see which one is next. This is kind of the standard spiel, right? North Carolina returns are part of TaxSlayer. Most information automatically flows, right? You need to know how to make sure the return is correct. Check the residency, check any adjustments. The one we'll typically see here is that If the individual receives a taxable scholarship, it may not automatically flow to the North Carolina return from the federal return. You may have to enter it again. The main forms are the 400, D400 for the North Carolina. There's an itemized deductions form, and then there's a part year non-resident form. There's an individual income tax credit form, which would have the credits for taxes paid to another state that Kathy mentioned. Non-residents don't get that credit, but residents do. So if we go back to our friend that did an internship over in Texas, if it wasn't in Texas, if it was out in California and she paid a bunch of tax out there, she could get a credit on her North Carolina return for the tax she paid out in California. But if she didn't pay any tax, she's not going to get a credit on that tax. This is a look at what those forms look like, just so that you kind of know what they look like. Oh, okay. All right, no worries. There you go. All right. What do you think? Shall we take a break here? State taxes can be a little dry. All right. What's next? Pennsylvania. Yes, let's take a break before we do Pennsylvania. Okay, let's take a 5-minute break, which means that we are going to restart at 6:27. I am going to pause the recording. All right, here we go, here we go. That's everybody that was here. So let's talk about Pennsylvania. All right. So residency for Pennsylvania can be either for domiciled residents or people can be statutory residents of Pennsylvania. Pennsylvania domicile is very similar, right? Place where you individual by present and voluntary intention establishes their true and fixed permanent home for the indefinite future, blah, blah, blah. They do call out children, especially children have the same domiciles as their parents or legal custodians. Becoming a legal adult does not by itself create a different domicile. You just have the power now to create a domicile. It is your actions that actually will establish a new domicile if you take any actions. If you don't, then you keep the same domicile. All right, Pennsylvania statutory residency. So a person who has a domicile outside of the Commonwealth of Pennsylvania can still be considered a resident of Pennsylvania for tax purposes. This is a statutory resident. The requirements for that residency is a person that has a permanent place of abode in Pennsylvania and spends more than 183 days of the taxable year in Pennsylvania. A permanent place of abode is a house, apartment, dwelling, etc., that can be maintained as a household for an indefinite period, whether owned by the occupants or not. It is not permanent if it's only occupied for a fixed or limited time or for a particular purpose. Talks about barracks and bachelor's quarters, quarters on ships, and other limited accommodations provided by an employer. Don't qualify. College dormitories, fraternities, sorority houses, and off-campus rentals by students enrolled in colleges and universities do not qualify as a permanent place of abode. So, that's a lot of words. If we come back, number one, FJ students can't be domiciled in Pennsylvania, so they are not a domiciliary resident. To be a statutory resident, they have to have a permanent place of abode and spend more than 183 days. College students that are in dorms, frat or sorority houses, or off-campus rentals are not permanent places of abode. So basically, our students that we talked with and that we're going to support for Pennsylvania are going to be Pennsylvania non-residents. All right, so that's the easy one. Right off the top, they're going to be non-residents. We don't have to worry about that. If they are residents and their family lived in Pennsylvania, like US tax residents, and their family lived in Pennsylvania before they came to school, they would most likely be a Pennsylvania resident, but everybody else, non-resident. Pennsylvania has slightly different tax rules, so they don't tax all types of income, but they do tax some types of income, and the biggest one among those is compensation, so that would be things like wages that you earn working for an employer. They also tax interest and dividends, business profits, Gains or income from disposition of property. So if you buy something and you sell it for more, then that money there. Also rents, royalties, copyrights, gambling, and all that kind of stuff. For our purposes, it's going to be generally compensation. You will notice there is something missing from this list that many of our students sometimes receive, and that is scholarships. Pennsylvania does not tax scholarship income. Even if it goes for room and board and it's taxable on a federal income tax return, it is not going to be taxable on a state income tax return. All right. General Pennsylvania rules, a resident's going to be taxed on all of their income, whether it's from Pennsylvania sources or not. Non-residents only have to pay tax on those 8 sources, only from Pennsylvania sources, 8 types and only from Pennsylvania sources. Basically, if you're a resident for part of the year, then you pay tax on everything for that part of the year. And non-resident, you only pay Pennsylvania tax for that part of the year. We're going to jump over that. There's the missing one. The other thing that's really important to know, so Pennsylvania does not honor federal tax treaties. So wages that are exempt on a federal return will be taxable on a Pennsylvania return. So this is a very strange situation that we can find ourselves in, where somebody would potentially pay federal tax on a scholarship, but then not pay any state tax on it. And they might not pay any federal tax on their wages, have to pay state tax on their wages. So it's kind of an interesting shift there. Generally, what we will see in this case, when we have somebody with wage income that is taxable in the state that is not taxable for federal, is that there will be different numbers on their W-2 to report this. So this is a huge clue when you see somebody that has different numbers there, right? If they have one number in their box 1 and a different number in their box 16, I think it is, that means that they probably had treaty exempt income and they have a 1042S, or there is a 1042S somewhere in the world floating around with their name on it that is supposed to be there and use it. So if we look at Harold's W-2, some of you caught this when you were entering it. You're like, why are those numbers different? This is why. Harold has a treaty benefit of $2,000 because he's a student from Norway. He earned $8,000 total dollars. $2,000 was reported as treaty exempt for federal purposes on a 1042S. The remaining $6,000 is on box 1. For Pennsylvania, because they do not honor the treaties, everything got reported as state wages, that $8,000. All right, that's where those numbers came from. That's the why for how those forms ended up the way that they did. All right, so I'm going to digress on the 1042S forms because we're going to see it here in 3 weeks, I will bet. So W-2 forms are generally provided electronically, and they're required to be provided by January 31st. 1042S forms are usually provided by paper mail, and they are required to be mailed by March 15th. And sometimes students have their address in their home country in their university system, so they go in the mail to their home country. So we will often see students who theoretically might get a 1042S, and they will come in and they only have a W-2, particularly people that show up in early February or mid-February, early March. So if we see a student in that time frame, and that is a student from a country that has treaty benefits for wages, we should ask them, are you going to get a 1042S? Have you talked to your university payroll system to confirm if you're going to get one of those or not? Having that mismatch is the giant clue that they really did get one, but if they're in a different state other than Pennsylvania, they may not have a mismatch. So like North Carolina, they won't have a mismatch, but we can still look at that and say, gee, you're a student from China. You definitely have a treaty benefit. You might be getting one of these documents. So what happens if they say, oh, no, I'm positive I'm not going to get a 1042S. When we say that, we say, okay, that's great. We're going to do the Sergio thing, right? We're going to take your treaty benefit away. You got $8,000. We're going to take 5,000 away. We're going to report 3,000 as taxable income. This is going to be great. You're going to get a big refund back. If they get a 1042-S a month later, right, now they have a problem. Now they have to file an amended return because what they filed was wrong. They have to go back into TaxSlayer. TaxSlayer can, I think, generally handle amended returns, but amended returns are out of scope for us. So we aren't going to do it for them. We're going to say, I'm sorry, we can't help you with that. Here's the guidance on the IRS website for that. They will also need to pay back that refund, probably most, if not all, of that refund. If they figure this out after April 15th, they are also going to owe some interest and penalties because all of that tax, the correct amount was due by April 15th. They haven't got that money back to the IRS by then, and they're going to have to pay a little bit extra. So it is a terrible headache for our students. We really don't want them to do it. And this is definitely something, right? The IRS gets a copy of the W-2 and they get a copy of the 1042-S, and they're not going to catch it in 2 or 3 weeks. But they do check for matches. And so that is something that would be caught in 6 months or 12 months or 18 months. All right, a few other things on Pennsylvania, off of my soapbox and back to the real thing. So the first one, joint returns in Pennsylvania are for convenience only. It's not really a joint return with better taxes or anything like that. It's just, sure, you live together, you can file together, that's fine. There's no difference in the way that the taxes are calculated. Pennsylvania is also great because they have a flat tax. That makes it very simple and straightforward. There are no real deductions, no real credits. Also, they almost always owe no state taxes and get no state taxes back. So I would say like 99.99% of the time, that the Pennsylvania return should be a zero tax owed, zero money back. So if you do a Pennsylvania return and you see that there is money owed or there's money coming back, give it a double check because that is not impossible, but it is definitely unusual and you want to make sure everything is correct there. Pennsylvania was very simple to start with, right? Automatically a non-resident, flat tax. We don't care about filing status. The where they get a little bit more complicated is that Pennsylvania has a local income tax. It's based on where you lived at the end of the year. Here's the information about where our partners, students, Lehigh students generally live. There's a school code and a political subdivision code is what PSD stands for. Usually if they're within walking distance of campus, which most of them are, that's the codes they would use. There is a guide to look up all of the different codes. We have this in all of the personalized guides for people. Here's school district codes. Here's like lookup codes, websites that they can look it up as well. Here's how to look up the PSD code. And generally those codes, usually that rate is going to be 1%. It's not guaranteed, but that's generally going to be 1%. The hard part about this is that the TaxSlayer FSA version that our clients are going to be able to use, it does not have local tax forms in it. So they're going to have to go download and manually do those forms or do them online through a separate system. There's a free system they can use where they go directly there and prepare the forms and fill it out, but they can't use TaxSlayer. As volunteers in that VITA Online Pro version, the practice lab, you can do local returns in TaxSlayer. You still have to enter a little bit of information, but it will prepare those forms for you. So if you choose Pennsylvania as your state, you can do the state tax returns locally for the practice ones, but for the real life, the clients are going to have to go outside of TaxSlayer to do that. All right. Pennsylvania also has a reciprocity agreement with a bunch of states along the East Coast. Basically, the idea is that if you are a resident in one, then you only have to pay taxes in that one. You don't have to pay taxes in the other one. Usually in that residency is based on domicile. So that means for most of our students, right, we're not going to have to worry about reciprocity because they're not domiciled and they're non-residents of Pennsylvania. All right. So let's come back to Harold. All right, we'll do this because I can see everybody again. We've done Harold like 3 times now, I think, so far. We'll get at least one more shot at Harold if you want to do Pennsylvania. Harold is a PhD student from Norway, right? He came here in January of 2023, lived off campus, has a scholarship. What is his Pennsylvania residency going to be? If you think he's a resident, raise your hand or do a thumbs up. Part-year resident, middle of the road, down for non-resident, or like applause. You think he's a, I've just lost entirely what I said. Non-resident is up, right? Resident is down. There we go. What do we think? What do we think that Harold is for Pennsylvania? Raise your hand if you think he's non-resident. Down if you think he's a resident. He is a non-resident, remember? He's an F1 student. He is a non-resident of Pennsylvania. So nice and easy, very straightforward. That's right, Ella. You got it exactly right. All right. All right, let's do, oops, I forgot. I have Michael. We have Michael. How can we forget Michael? All right, Michael is, there we go. Hi, Rick. Michael is a student. He is a sophomore from Lehigh, or studying computer science at Lehigh. He is a US citizen, but his parents live in Boston, Massachusetts. They're supporting him. They're paying, he's got a tuition scholarship, 50%, but then his parents pay for the rest. They pay for like room and board. He can be claimed as a dependent, but he's got a job on campus working in the computer labs. So US citizen now. What do we think? Is he a non-resident? Is he a part year or is he a full year resident? Thumbs up for non-resident, applause for full year resident. I'm gonna wait till I see some. Thank you, Amanda. What do you guys think? Yes, that's right. He is also a non-resident, right? So remember we said, right? A person that is attending college that's living in a apartment or a dorm or off-campus rental, right? That does not count as a permanent place of abode. His domicile is going to be his home with his parents, right? He has not like struck out on his own yet. They're still paying for most everything for him. So he is going to be a non-resident of Pennsylvania as well. All right. All right, Pennsylvania tax form. Again, right? The forms are part of TaxSlayer. That's why we love it, right? It's super easy to do. We don't have to do a lot of clicking. We just, well, we do a little bit of clicking, but we don't have to do a lot of typing or anything like that. This is what the forms look like if you were to fill them out. We're not going to actually do that. We're going to do it in TaxSlayer. And all right, I'm going to go back just to show you what a return looks like in TaxSlayer for Pennsylvania. Let's go find. I knew that was not going to work. Come on. Okay. There we go. All right. You go here. You go here. All right. Personal information. That's right. Nope. Can't remember what the address is for Pennsylvania. Anybody remember what that is? 18015. There we go. There we are. All right. Continue. Continue. All right. In a proper world, we would go back here. We would adjust this to say Pennsylvania, right? Because her W-2 now says Pennsylvania. If it was a real return, that would have different numbers because Minnesota, Pennsylvania taxes are different. But here, we would just go here. We would delete California because she's no longer a California person. We go here, Pennsylvania, non-resident. There we go. Once again, just like that, we're basically good. All right. So very straightforward to do the returns as soon as you know the important part that their residency is in Pennsylvania. And if we were going to go in and do a local return, we would do that here. We go to Pennsylvania, we would go to local, and we would enter that information. I can't even remember the code. I don't remember the address. And we would walk through that. You would enter W-2 information, so on and so forth. So that's where you would go through to do that. Okay. All right. Any questions about Pennsylvania? Yeah.
Pennsylvania state tax numbers didn't charge you.
I think no. I would have to look at it again, but I think it doesn't come over. There's basically no deductions or credits. So you don't subtract anything from your income ever. It's just like, this was your wages, here's your tax. So that's why people never get refunds, because you can just do it up front to say, oh, you got this much every month, you know, this is how much tax you owe. So, yeah. Okay, we did that. Come through this again. All right, let's talk about Minnesota. Okay, so this is our last state that we're going to do for today. We're going to talk about Minnesota, and then we're going to break, let everybody work on Moodle, either catching up or getting ahead on their next step here. So residency for Minnesota is based, again, this is a common theme, right? Domicile rule. Your permanent home is here in Minnesota, or the 183-day rule. You can imagine where this came from, right? This 183 days is 6 months. We are in Minnesota. Some of us are in Minnesota, right? It is very cold today, but generally it's very cold in the winter, right? So people run away from the cold in the wintertime. They go live somewhere like Arizona, and then they come back up here to Minnesota when it's beautiful summer weather. And they say, oh no, I live in Florida, actually. There's no tax. I don't have to pay Minnesota tax. And so Minnesota established these rules to say, no, you are here long enough, you are still a resident, you have to pay tax to us. And so that Minnesota rule is the 183-day rule. It is slightly different than the North Carolina rule. North Carolina, we just cared, like, was your body physically present in North Carolina? That was all that really mattered. But for Minnesota, there is a second level of fun that gets thrown in. So the 183-day rule in Minnesota, you must spend at least 183 days. North Carolina was more. Now this is at least, so equal to or greater. Any part of a day counts as a whole day. You must also rent, own, occupy, or maintain an abode. An abode is just a technical way of saying a residence in Minnesota that is suitable for year-round use, that is equipped with its own cooking and bathing facilities. If you're married, this applies to both you and your spouse. So, wonderful cabin in the woods on some lake up in northern Minnesota, not suitable for year-round use. That would not be an abode. A hotel room that does not have its own cooking and bathing facilities, that would not be abode. A lot of dorm rooms don't have their own cooking and bathing facilities, so those are also not abodes. Like an apartment or a house, that is generally going to be an abode. All right. And now the fun part. If you meet both of those two conditions, you were here for 183 days, you rented, owned, occupied, or maintained an abode, you are a resident for the time that the second condition applies. So imagine you are here, you are living in the dorms for the first semester, and then you're gone over the summer and you come back for the fall semester and you're in the dorm, but like December 15th, you rent an apartment. You're going to be a Minnesota resident from December 15th on. You're here most of the year, 183 days or more, but you're only a resident for those days that you rented, owned, occupied, or maintained an abode. So it is a lovely little wrinkle that we see a lot of. It is also very possible to be a resident while you are not physically present in Minnesota. You rent an apartment, you have a lease for the entire calendar year, you pay your rent every month on time, you're great. You're also gone for the summer, you're out in California doing your wonderful internship. You're not physically present in Minnesota at all, but you are renting in Minnesota while you are gone. You meet that 183-day test because you were here in the spring and the fall. You meet the rent, own, occupy, maintain for the entire year because you rented the entire year. That'll make you a full year resident of Minnesota in that case. And we see that situation multiple times maybe not every tax clinic, but many times every year. All right, so you can be a non-resident of Minnesota, either by being here for less than 183 days, or you were here for more, but you were never renting, owned, occupying, maintaining an abode. You can be a part-year resident of Minnesota, means you were here for at least 183 days, rented, owned, occupied, maintained for some part of the year. Could be a day, could be 11 months and 25 days, but it's not the entire year. To be a full year resident, you have to be here in Minnesota for at least 183 days. You have to rent, own, occupy, or maintain an abode for the entire year. So when we get to the questions for Minnesota in our personalized guide, we also ask about, okay, you are physically present here. Did you rent, own, occupy, or maintain an abode for that time period? Some of it or all of it, because that will affect your residency. Once again, there are a couple of effects for residency. So Minnesota has a property tax refund or a renter's credit. They've changed it this year. We're going to train on that next week. But for now, just know that there is this property tax refund. Only part year and full year residents are eligible for that refund. So if you're a non-resident, if you came here for the first time in August, your first semester, you rented an apartment, but you were only here for like 120, 140 days, you're not going to be eligible for the property tax refund because you weren't here long enough. The second effect it has is when you have to pay Minnesota income taxes. If you are a non-resident or a part-year resident, you only pay Minnesota taxes on Minnesota income for that time that you are a non-resident, either for the whole year non-resident or part-year non-resident. If you are a Minnesota resident, you pay taxes on your US income while you are a Minnesota resident. And unlike North Carolina, there is no credit for taxes paid to another state. So if you are here in Minnesota, you do that where you have the rent for the entire year, you go off, you do this wonderful internship, you come back, you will pay taxes in 2 states, both here in Minnesota and in the other state, and there's no money back. All right, yep, these are the things. So there is a credit for taxes paid, but you have to be domiciled in Minnesota to be eligible for that. So, and we do get lots of questions about that for the people that work in multiple states. So double taxation without representation. All right, I already did that. The M1NR form is the form that's used to show the allocation of income for non-residents and part-year residents. It's got like one column for like total amounts, and it's one column for Minnesota amounts. Sometimes we have to make a few adjustments if things don't flow through all the way properly. This only affects your income and your return if you had income in the other state, right? if all of your income is here, right, you're a Minnesota non-resident, but if you only worked in Minnesota, so then your total is like $1,000 and your Minnesota is 1,000 because there's no other state. So in that situation, it doesn't have any impact on your return. You can put all those numbers there, but they're going to be the same number. You're going to pay tax on everything. Yeah, Minnesota non-resident, any of the state non-resident does not mean you don't pay any taxes. It just means non-resident. There is a reciprocity between Michigan and North Dakota. You're not going to pay tax in Minnesota if you're a full year resident of one of those states. You have to have gone back to that state at least once a month. Your only income here in Minnesota must be either personal or professional services. That is not something that we ever really commonly see. So maybe when we start doing more folks out in like Morris or Crookston, where they are right next to North Dakota, we'll see that. But for now, that's not something we typically ever really see. All right. Minnesota uses the same filing status like you did for your federal return. Minnesota also honors tax treaties. So if you get money off on your federal taxes, you're going to get money off on your state taxes as well. They also have a standard deduction that students from India can use. Once again, it is not the same as the federal amount. The federal amount is $14,600. The Minnesota amount is $14,575. One little bonus in Minnesota, if you have a dependent that you can claim, so those individuals, Canada, Mexico, India, South Korea, if they have a child they can claim as a dependent, you also can claim an exemption for dependents here in Minnesota as well. So for every one of them, it's an additional $5,050 off of your tax return for your income. But you have to be able to claim that dependent on your federal return. Last year, Minnesota, well, actually 2 years ago, Minnesota gave out this 2021 direct tax rebate thing. It was the government had the surplus, they were wanting to give money back. They tried to frame it as a refund of your 2021 taxes to hopefully not make people pay taxes on it, but that didn't work. If you received one of those, you had to pay tax on that income. That should have mostly been all last year. I don't think that we're going to see a lot of people in that situation this year. The only people that we could possibly see is somebody that, like the Minnesota tried to send them a check and it got lost, and they tried again and it got lost. They did that for about 9 months, and then finally that check arrived and they cashed it in 2024. So theoretically, it's possible we might get one of those, but it seems very unlikely. If they do get one of those, it was a payment of $260, so it's always the same amount. It is taxable on their federal return. It is not taxable in Minnesota. All right. One note on Minnesota returns, and this kind of applies for most of the other states, which is if you are married, it doesn't matter if your spouse has a social security number or an ITIN number, you are not going to be able to e-file your state tax return. The reason why is that most states want to have your spouse information on your return. Even if you're not filing a joint return with them, they still want to know, like, oh, I said that I was married to Abby, but Abby's not saying that she's married to me. So they check up on everybody to see what they're doing. And so you're required to report it on your state return. You're not required to report that information on your federal return. You file separately on your federal return, it's just you on it. You don't need to put in your spouse information in. In fact, there is no place to put spouse information on a 1040 NR in the TaxSlayer software. So you'll get questions. I can't find anywhere to put my spouse. It's because there's nowhere to put them in there. But that does mean when you go to e-file, Minnesota requires that. There's nothing there, and so you can't e-file. So when we have married non-resident aliens, they are not going to be able to e-file their state return. They can still e-file their federal return, but not their state return. All right, so let's go back to our dear friend, Lisa. and talk about what is Lisa's tax residency going to be, right? Lisa was our very first example. She was an F1 student from China, right? She came here in 2022. She went home over the summer in 2023. She was here for all of 2024. And now this phrase makes sense. She lived off campus for all of 2024. The apartment qualifies as an abode. So do we think that Lisa is a non-resident? Thumbs up on that, or part year resident? Or is she a full year resident of Minnesota? Yeah, I'm gonna go down, down. We're gonna say boo. Yes. Anybody online wants to give me a thumbs up for residents? Applause. Or thumbs up for non-resident, pardon me. Yep, there you go. Thanks, Zach. Thank you. All right, yes. So she is a full year Minnesota resident. That's exactly right, right? She was here for more than 183 days. She rented an apartment on campus for all of 2024. That makes her a full year resident of Minnesota. All right, let's talk about Sunil. If you remember Sunil, we haven't talked about him in a long time. He was an F1 student from India. He came here in August of 2021. He's not left. He's lived off campus for all of 2024 as well, right? He is also going to be a full year Minnesota resident, right? Physically present here the entire time, rented an apartment the entire time as well. Let's talk about, we're gonna skip, no, let's do Emily. Emily is a resident. All right, she is a junior here studying insects. Her parents are from Apple Valley, Minnesota. That's just a suburb of the Twin Cities. Her parents are paying for her school tuition, room and board. Sure, they're claiming Emily as a dependent on their tax return. I don't say it here, but Emily lives in a dorm room. But she is a resident, so she is a US citizen. She lived in Apple Valley, Minnesota before. So what do we think for Emily's residency? Is she going to be a non-resident? Do a thumbs up. Part year resident, or down, or give me clapping if you're online. Yes. All right. Yes, you guys have it exactly right. Right. So she is a resident, a full year resident of Minnesota. And the reason why is that she is domiciled here in Minnesota. Right? She is a US citizen. She is able to establish a domicile in a state in Minnesota. This is where she has lived with her parents for her whole life. She is still here in Minnesota. The fact that she's in a dorm room just says, okay, maybe that address is not her domicile, but her domicile is still here in Minnesota. All right, let's do one more. We're going to go back to our friend Olivia. So earlier, we talked about her when we talked about California. We said, okay, she is a US citizen, right? Her parents live in Wisconsin. She worked at the U of M professor's lab, going to school here at the University of Minnesota. She had an internship in the summer at the 3M manufacturing plant. All right, and I will throw out in there that while she is here on campus, she is renting an apartment, but she subleased it over the summer. All right, so raise your hand if you think she is a Minnesota non-resident. I'm gonna go middle if you think she is a part year resident. Go down if you think she's a non-resident or full year resident. Yeah. So this one is very tricky, right? So this is what I would probably say about this, right? So she was probably present for more than 183 days in Minnesota, right? And she did rent an abode in Minnesota. So she would probably meet that 183-day test. But is she domiciled in Minnesota or not? Right? She is not domiciled in Minnesota. But because she met that 183-day test, she's going to probably be a part-year resident. The key for this is because she subleased her apartment over the summer, right? That gives us a period of time where she was not domiciled in Minnesota, she was not physically present in Minnesota, and she did not rent, own, occupy, or maintain an abode in Minnesota. No, so generally when we say that she's subleased it, that means that she's not paying the rent. Somebody else took over her lease. They're the ones paying the rent for the summer. So, all right. That is more complicated than you will typically have to see. Okay. All right, let's talk a little bit about income tax preparation and then we're gonna turn you all loose, all right? Once again, right, Minnesota's in tax layer. Most of the information automatically flows. Really, it's choosing that appropriate residency determination. Usually what they say in the Minnesota one in particular is not right, so we need to know how to fix it. We're going to see a lot of Minnesota returns for all of our volunteers. If it's just a simple return, it all flows in very well, correctly. It's not a big deal, right? It's only when you start having multiple states that it tends to be a problem. Yes, that's really the way. The Minnesota forms, there's an M1, which is the main income tax form. The M1W reports tax withheld. There's an itemized return or form for itemized deductions. A non-resident form to allocate the income. Minnesota also has a student loan credit. So if we have any grad students that are paying off undergraduate loans, they can get a student loan credit for the interest they pay. All right, this is what the forms look like. Ooh, but we're gonna do this. If you have been, you may or may not have noticed, but when we do all of our non-resident scenarios, I never tell you that they want to contribute any money to the presidential election campaign fund. I do that for a couple of our resident ones, but I don't for our non-residents. Minnesota has an option to also contribute to a state election campaign fund. And for both of those, it doesn't affect your refund, but you can say, I want the money to go this way or that way. However, for our non-resident alien clients, we generally recommend that they not make a contribution here. Federal election law prohibits contributions, donations, expenditures, and disbursements made by foreign nationals in connection with any election. So if you are a non-resident alien, you cannot give money to a campaign fund. Try to get the person that you want elected. That's interfering with a US election. It doesn't matter if it's a federal or a state or a local. Now, the odds of like something terrible happening because they clicked a little box on their form are probably very low, but there's no reason to wade into those waters if we don't have to. So our general recommendation is that they should just leave that blank. Okay. And with that, we're going to move on there. We're going to move on there. Next week, we'll talk about those more. Okay, so the plan for the rest of tonight until 8 o'clock. If you haven't already done it, please finish last week's homework. So you had, I think I put it in the email, right? There was, or I talked about it before, 2 assignments and 2 quizzes. I did on purpose make those assignments sequential. So you can't do Kim's return until you have done Harold and sent it to me and I've passed you. That's because a decent number of volunteers were like doing everything and submitting it to me, and you guys would make the same mistakes on both of the returns. So I have to send them both back to you. So we're going to do them one at a time. I will try to get them to them as quickly as I can. So I will be grading as soon as we're done here. If you've already submitted stuff. Then once you're done, do the state questionnaire. And then there's a Minnesota quiz, and the first Minnesota scenario is out there for you to work on as well. And the rest of the stuff I will start populating tomorrow for everybody based on the states that you choose and my imagination for scenarios. All right. We talked about that. We talked about that. Talked about that. I'll also open up a few resident scenarios as well for people that are doing resident returns. So if you're one of those folks, look for those to come as well. Not going to do that. Yep, that's another one. Okay. And I think that's everything. All right. Does anybody have any questions? Yes.
I wonder, given that, Minnesota has, property tax refund, I wonder what
Yes.
ours.
None of the other states that we support have a property tax refund like that. So that's not to say that they don't, there aren't other ones that do, but none of the other ones that we support have that. So, yep, of course.
Maria,
Oh, yeah.
I missed last week and I don't know how to get to the practice lab via a link in Moodle, you said?
Sure. Let's see. So the easiest way is if you go to Link and Learn
Yeah.
and then just click on Practice Lab.
Oh, okay. So there's no direct link from one of the modules to Link and Learn.
I think I might have the direct link or I have like the associated link that goes to the Link and Learn and then you just click there. So
Okay. And
it's
I'm a
all the
tech
same.
I'm a tech idiot. I have no idea how I get my finished Harold Gormson return from the practice lab into your system.
Yes. Let's do that. Let's see if I can get back in. That's good. All right. So when you are doing a return,
Mhm.
we'll go do Lisa because
Right.
we were just messing around with her. So this is what I do. I'm sure there's other ways to do it, but this is the way I do it. Go to summary print,
Okay.
view print return,
Mm-hmm.
and then print your return. And it downloads just like that.
Okay. I know how to get that far, but how do I get it from that system into
Into this. So
your
I think,
system?
yes, I think that's going to be easier to like have you show me your screen and I can tell you where to click. So let's do a breakout room as soon as we finish up here with everybody else, okay?
Okay.
And then you can show me how to, I can talk you through
Okay.
that one. All right. Does anybody
Thank
else
you.
have any other questions? All right. Okay. So I'm going to be here. You can chat with me. You can send me an email. I'll get Linda to get her going, and then I'll be just available grading until 8 o'clock. So you guys are welcome to keep working, try to get through all of the stuff and get caught up. Okay. All right. So look like two. And through. Cute.